Hello guys, so today we're going to be looking at inventory featuring the Perpetual inventory system. The inventory system, it is updated every time a transaction that involves inventory takes place. So you are given an opening balance. This was supposed to be balance. An opening balance of 4,000, right? Which is on the debit side. I don't know where I stopped. Just received the call. Sorry for that. So we're given an opening balance. I think I ended here. Yeah, opening balance of 4,000 on the debit side, meaning that we're gonna have an opening balance on the first of. Okay, you're gonna be told which month you're dealing with. Right now, we're dealing with the month of May, 2025. So the first of May, 2025, you're gonna have an opening balance. Mm, Opening balance of 4,000 rand. Right. Then transaction number one tells you that the company buys on credit on the first of May, 2025. The stock is worth 20,000 rand. The accounts that are going to be affected when the company buys this stock is going to be account payable because the debt is going up, and also inventory because the inventory is going up. Liability increases where on the credit side, but because here we're dealing with inventory, so we're going to focus more on inventory since we're dealing with the inventory account. So when the company buys stock, inventory goes up, so it means that we're going to record this on the debit side of the inventory account. So under details, you're going to have account payables. And then balance, you're gonna have 20,000 rand. And then you go to the next transaction, right? You're gonna also have something similar to this on your account payables, but I'm gonna do the account payables account alone so that you can know how to deal with this. But now we're focusing on inventory account alone. So the next transaction is states that the company buys stock using cash on the 5th of May 2025. So when cash is being used by the company, it means that bank decreases, but stock increases in this case because the company is buying stock. So on the 1st of May 2025, you're going to have bank under details and then you're going to have 10,000 rand. The third transaction tells you that a customer bought goods that are worth 2,000 on the 7th of May on cash. Cash is entering the company's bank, right? But inventory is decreasing because they are buying. When a customer buys inventory, the inventory decreases, right? So under date, you're going to have the 7th of May, 2025. Under details, you're going to have cost of sales. Cost of sales. And then under balance, you're going to have 2,000 rand. Then we look at the next transaction. So because like the business no longer has the inventory on hand, right? It is given to the customer. Then you must show that how much does it cost, like to move out the assets, which is the inventory. That is what happened on the 7th of May. Then on the 9th of May, which is transaction number 4, a customer bought goods worth 2,500 on the 9th of May 2025. I know I just repeated the date on Friday, right? Still, inventory is decreasing, right? Yes. So you're gonna have 9 May 2025. The details still, they're also gonna be cost of sales. Of sales. And then your balance is gonna be 2,500 rand. 2,500 rand. You're going to show that this was a credit transaction under the account receivables. Sorry, yeah, account receivables. You're going to see that when we do the account receivables accounts. And then transaction number 5, a customer returned damaged goods worth 500 on the 20th of May 2025 from the cash sales that happened on the 7th of May 2025. So basically what we're doing here is reversing the transaction. The stock that was bought is now being returned back to the company, which means that the inventory account also, the inventory account is going to increase. Yes. So because when the transaction took place, the accounts affected was cost of sales, inventory, right, sales returns, and accounts receivables. But because we're focusing on inventory, we're just gonna take cost of sales because cost of sales goes hand in hand with inventory. You're gonna say the 20th of May 2025 details cost of sales because we are reversing this transaction in a way. This one. Yes, this one. And then under balance, you're gonna have 500 rand. That's it. And then on transaction number 6, the company returned damaged goods worth 2,000 rand on the 25th of May. So stock here is increasing again because no, stock is decreasing here because the company is taking what they bought from the supplier, they're taking it back. So the stock is decreasing. You know, 2505, 25.5, 2025. And then under details, you're going to have account payables. We're sort of reversing that transaction in a way. Account payables, by that transaction, I'm referring to this one. So 21st of May 2025, account payables, and then you're going to put 200 under balance. Yeah. Is it 200? Yes. And then transaction number 7, the owner of the company took stock that is worth 3,000 rand for personal use. Stock is still decreasing. It's just that now the owner took it. There's no, the owner is taking stock, but the owner is not gonna pay. Like, it's just being made known that this owner took it for personal use. So could be that he paid, but it would have been no. The owner took stock for personal use. So under date, stock is still decreasing anyway. So under date, we're gonna have, okay, there was no date, so let's just put the 30th of May. I'm not saying you put your own date, no. I'm saying, okay, let me just put the date. 30 May 2025. Yeah. 30 May 2025. And then under details, you're gonna have drawings, and then you're gonna have the 3,000 rand. Then you're gonna add both sides together and you're going to see which side is big. In this case, the debit side is bigger. So your closing balance is going to be closing balance. Going to be 29,300. How did I get that? I added both sides, got the totals, and then subtracted the smaller size from the bigger size, and then I got the 29,300. And then on your opening balance for inventory, on the 1st of June, you're going to have an opening balance of 29,300. See you on part 2.